Chapter 11 IPO trades with the AVWAP. A private company first sells shares of stock to the public to raise capital. The process is known as the initial public offering, or IPO. It is referred to as going public because it is the first time the public can own a piece of the company through an offering on a public exchange. It is the birth of a stock. Initial public offerings are a unique opportunity to study price action from the inception of a stock as a publicly traded company. Because there is a defined starting point to anchor an AVWAP from, an IPO offers the purest look at supply and demand from a fixed starting point shared by all participants. Why anchor to the IPO? All IPOs start their life as a public company with a single trade. That first trade is the opening print, where all of the buy and sell orders are matched. After that first print, the stock trades freely in the open market. The opening print is usually the largest volume of stock on a 1-minute time frame. The large volume of the opening print is the aggregate of all the buy and sell orders. After the opening print, the stock trades like any other stock, subject to the laws of supply and demand. The AVWAP has been my primary analysis tool for IPOs since I first began to experiment with it. Chart 11.1 is a blog post from www.alphatrends.net in 2007. For the first couple of weeks, daily chart data is of little value without an AVWAP. If you trade from a chart with daily data, wait for more data to build to make sense of the chart. If you want to use the 50 DMA, you need to wait until the 50th day the stock trades. If you want to trade the first day the stock comes to life, look at intraday charts and use VWP/AVWAP. Start charting the shortest time frames. I start my analysis of IPOs on the first day with a 1-minute chart. The 1-minute chart allows me to see price action develop in real time. As the stock builds more price and volume data history, my analysis will move out from a 1-minute time frame to 5 minutes, 15, 30, 65 time frames and longer. Of course, it is always by using a multiple time frame analysis where we find the most value. The first trades of an IPO are similar to gap trades. There is a sudden supply/demand shift, which becomes an important anchor point for the stock. There is no subjectivity about where to set the anchor in an IPO. We set it from the first trade. The following examples use several timeframes to emphasize how important the IPO AVWAP is from the first trade of a new stock to several years after the IPO. Chart 11.2 is a 1-minute timeframe. It begins the moment the stock traded through the end of its first day as a public company. There are two AVWAPs on this chart. The first VWAP, purple, is anchored to the first minute of trading. The second AVWAP, blue, is anchored to the second minute of trading. The stock was a hot IPO, which means there was a lot of demand right out of the gate. We know that because the stock immediately rallied so strongly that it triggered an exchange halt, 1, after a quick rise of 10%. Stocks are halted by the Nasdaq for a few minutes when a move of 10% or more occurs in a 5-minute period. The AVWAP from the first minute trailed the stock significantly through the end of the day. If you waited for a pullback to the AVWAP from the open, you would have missed the move since it never touched the first minute AVWAP, purple. If instead, you knew to anchor from the second minute that does not include all of the volume from the open print, you would have had the opportunity to purchase the stock on 2 occasions, 2 and 3, as the stock tested and then rallied away from the second minute AVWAP, blue. Stops for these buys would be placed below the low at the blue arrows. Graduate to multi-day AVWAPs. Chart 11.3 continues to build on the stock from chart 11. 2. This is the same stock as chart 11.2, 2 days after the IPO. This chart is constructed with 5-minute data. The circled area shows how the AVWAP from the IPO found buyers on the day 3 as the stock opened on a gap down. It will surprise you how often buyers or sellers congregate near the IPO AVWAP, even years after the stocks come public. Institutions will often buy on pullbacks to the IPO AVWAP, so we want to be ready to act in that area as well. After day 1 of an IPO, it is no longer necessary to anchor from the second minute as the divisor increases and the impact of the first minute trades lessens. Chart 11.4 shows how the addition of AVWAP from the IPO adds structure to our analysis. The left chart shows the stock with price action only. On the right, we see the AVWAP from the IPO along with price action for the same stock. Notice how the initial rally failed to hold. 1. As it made a lower low under the AVWAP, it led to a quick sell-off below 1. 2 days later, the stock rallied to the IPO AVWAP 2. After it moved through the supply in that area, it made a higher high above the AVWAP 3. This would have been a low-risk entry with an initial stop below the most recent and relevant higher low 4. As the stock rallied past $13 per share, it would be time to raise the stop to under 5. At 6, the stop 5 would have been undercut and stopped out. Of course, someone with a longer-term goal might not have their stop so tight, and more risk-averse traders may have had an even tighter stop. Chart 11.5 shows the AVWAP action for an IPO stock. Here is an example of the first 3 days of trades for an IPO with 10-minute data. We set the anchor to the first candle, 1 on the chart. Notice how the buyers scooped up shares of the stock on the week open on the second day, 2, and the day after that, 3. With the benefit of hindsight, we can see a purchase 2 or 3 would have worked, but the better buys were A, B. These were better buy levels because the stock had upward momentum and a stop could go below the pullback low. A look at the 1-minute chart on the open of day 2 and day 3 would have been the best opportunity to purchase this stock with a second day entry technique. Longer-term chart timeframes for IPOs. The IPO AVWAP anchored 1 in chart 11.6 was briefly undercut 2 before the stock broke to a new high 3. A purchase 3 would make sense with the stop below the low 2. There are several higher lows, discussed below, so the stop should have been raised to protect the gains over the following months. Regardless of where you may choose to set a stop, it would be unforgivable to allow the stock to come all the way down to break even, or worse, to allow it to turn into a loss. Notice how the stock tested and closed above the IPO AVWAP at points 5, 6, 7, 8, and 9. These were all good levels for a stop. The stock broke and closed below the IPO AVWAP 10, 5 months after the stock came public. The stock then held below the AVWAP 11. A short sale would make sense here since the stock reached a lower low below AVWAP. A stop on this short sale would have gone above the most recent and relevant lower high, 12. In chart 11.7 we see a stock that was trapped under its IPO AVWAP for months. The stock in chart 11.7 looked like it would be a successful IPO for the first few days, since it opened near the low of the day, 1, and closed well above the IPO AVWAP for the first few days. It broke below the IPO AVWAP 2, but recovered 3. At 3, it looked like buyers had control again, but it didn't last long, and the stock broke below 2 and made a lower low 4. This is where we have confirmation that sellers established their dominance 4. Over the next 11 months, the stock rallied up to the IPO AVWAP 5, 6, 7, and 8, and sellers maintained control as the stock failed to close back above the IPO AVWAP. As downward pressure accelerated away from the AVWAP, there were excellent short sale opportunities, A, B, C, with protective stops above the preceding highs, 5, 6, and 7. Chart 11.8 shows how the IPO AVWAP flipped from resistance to support, and then back to resistance. Chart 11.8 is constructed of weekly candles. Some people prefer to look at longer time frames with fewer data points for less noise. With 1 week being 5 days, there are fewer candles to represent the same data. As with all technical analysis, the IPO AVWAP concepts are the same on all time frames. The anchor is set to the first candle, 1, of an IPO, regardless of the time frame. Over the next 3 weeks, the stock remained below AVWAP until 2, where it could have been purchased with a stop under A. As the stock progressed higher, it found buyers on pullbacks to the IPO AVWAP 3 and 4. When the stock moved higher from that level, the stop should be raised to just under 4. It would have been stopped out with a good gain 5. The next couple of weeks the stock made a higher low until 6, when it started to trend lower, below the low of the prior low. The break, 6, occurred below the IPO AVWAP, so a short sale, 7, made sense with a protective stop above the high, 6. The IPO AVWAP can be useful for years after the stock comes public. Chart 11.9 is constructed of weekly candles, showing nearly 3 years of trades for the stock. We set our anchor to the first week of the IPO, 1. After 5 weeks below the IPO AVWAP, the stock was a good buy, 2, when it cleared the IPO AVWAP and cleared the prior week high. The stop on this long would be placed, A, and then raised up under the low of 3, where the stock bounced from the IPO AVWAP. At 4, the long position would be stopped out as the stock made a lower low. A couple of weeks later, the stock broke below the prior week low, 5. This would have been a good place to enter a short position with a stop above B. If a trader progressively lowered the stops to just above the lower highs, the short would have been stopped out, 6. This is where the stock broke above the IPO AVWAP and above the prior week high. A couple of months later, the stock pulled back and found buyers at the IPO AVWAP 7, which had been set over 2 years prior. At 8, the stock cleared the prior week high after it successfully defended the IPO AVWAP. A purchase 8 made sense with the stop just under the low 7. Historical IPO example: Google, Alphabet, Inc. came public in 2004. The daily chart 11.10 shows the first year of trades in the stock. The inset shows greater detail of the first couple weeks of trades. The AVWAP starts on the first day of the IPO, 1. On day 7 of trading, see inset, the stock undercut the IPO AVWAP, 2, and it would have made sense to be stopped out there since sellers were in control. About 2 weeks later, the stock climbed back above the IPO AVWAP, 3. A new long purchase could be made here with a worst-case stop below the low A. It wasn't until 6 months later that the stock tested the IPO AVWAP 4. For those who didn't already own the stock, it made sense to purchase, 5, as it rallied away from the AVWAP. A stop on this purchase, and any existing long position, would go under the low 4. The stock has been one of the great stocks of all time.